The first quarter normally is always the slowest quarter of the year in terms of growth. It's in the 1% range. We had 3.2%. Then we had productivity growth of 3.6%. And this last week, we had new jobs of 263,000. So the economy is not rolling over. It's starting to pick up.
The unemployment rate is the lowest it's been in nearly 50 years.
Yeah.
So
we went to the moon when the last time we were at 3.6% unemployment rate. So
yeah.
It
was December 1969.
Yeah.
So
think about that. We went to the moon that year.
Maybe. I don't know. There's a lot of conspiracy theories about that. Hi there, my name is Ashley Micciche with True North Retirement Advisors, and I'm here with our founder and president, also my dad, David Wilson. And in this video, we're talking about what is going on in the markets and the economy. And this is a video we do every month around the middle of the month just to check in and see what's going on and how it's impacting you and your retirement. So far this year, the stock market is already up like 15%. How much is it up already?
14.9 through yesterday,
So we're in early, so first part of May, and already, like I tell clients all the time, if the market went nowhere from here for the rest of the year, I'd be happy because we're already up a lot for the year.
I think the key, where I see things now for the second half, earnings are going to start to improve. We have record amounts of cash sitting on the sidelines. So in the fourth quarter, almost bear market we are almost technically in a bear market there. $148 billion came out of the market at that time. For 26 consecutive weeks, equity mutual fund had outflows. In other words, more money came out of the mutual funds than went into stock mutual funds.
So money was flowing out of the market through what time? When did...
Oh, this was, in the fourth quarter. That's when that occurred.
But had that continued into
No, it kind of stopped.
Okay, so now we have this long, 6 months of money coming out of the stock market.
It's been building up in cash in money markets. So it is there. It's like a trigger ready to go off, I think. So if we get a trade deal, I think the market could spring, I'm not going to say what percent, but I think we could go a lot higher.
Let's focus a little bit on China because that seems to be
that's what's rocking the market right now.
Yeah, so here in early May, earlier this week, the Dow was down, I think, 500 points.
Yeah, we had hit new highs last week, new all-time highs. And over the weekend, Trump put out a couple tweets, and we were down overnight, 400 or 500 points. And it didn't turn out quite as bad during the week, but I mean, we've had a couple of tough days.
Yeah.
Because China basically, all the agreements. I mean, they were making all this progress, and what happened is they, in the end, this 150-page document both sides pretty much had agreed to. China says, no, we're not going to do it.
Yeah.
So,
but you were saying that China, this is their MO. Right?
Yeah. So there's a, I guess it's a 5th century document somewhere that this is how the Chinese negotiate. So this is not, it shouldn't be a surprise to anybody, and that I think in the end they need this as much as we do. And the reason is if these these tariffs go in on the 200 billion. I think it shaves about 0.3% off our economic growth. So if we're growing at 2.5%, say 3%, that's not much of a haircut. But for China, you're shaving off 1 to 3%, and so that's a significant hit for them.
Yeah.
And I think in the end, we're going to get a trade deal of some sort. I just don't know when it's going to be.
Yeah. So U.S. is in a stronger negotiating position.
Absolutely.
We know that. China knows that. And the likelihood is that we're still optimistic that a China trade deal will go through.
The problem is the Chinese Communist Party, the power, They don't want to change. That's where the
Yeah.
rub is. But do you want to lose 1 to 3% a year? You know, and then there's
No.
yeah. So, but the what everybody always, you know, the fly in the ointment is, oh, this could be a trade war back and forth.
Yeah.
And the reason I don't think it's going to come to that is because Mr. Trump wants to be reelected.
Yeah.
So he's not going to roll the economy over. At least I don't think he would.
He just needs to stay off Twitter for a little while.
Good luck.
If we get a trade deal, it could be a real boom for the market. If we don't get a trade deal, do you think we already talked a little bit about it?
I think we could pull back 5 to 10%.
Okay, so not the end of the world.
Not the end of the world,
Yeah.
no. That's
Okay.
because, again, as much as people think China, so think of it this way. On every product you see, it says made in China. But you know who's buying all those products? The United States.
This mug is made in China.
There you go.
Yeah.
But who's consuming it?
Me.
United States.
One last thing I wanted to talk about, which is kind of the elephant in the room. At least when I talk to clients, it comes up over and over again. And that is, you know, we are already 10 years into an economic expansion. And I think a lot of clients and a lot of people I talk to are nervous because it's been so long and they feel like
the end is near.
The end is near, the end is near.
Australia, that's a normal country. How many years have they had of consecutive growth? You know how many?
How many?
28.
They haven't had a recession in the last 28 years?
Yeah.
I did not know that.
So we're right there. I think one more month, and we are there at the record.
Longest
Yeah, the longest
economic expansion in the history of the United States. We're there, basically.
And the reason I say it can go on longer than any that we've ever had is because when we came out of the last recession, we came out the slowest. We had the slowest glide path. Usually the plane takes off, right?
Yeah.
Straight up. But this one was just gradually, we were very slow growth.
So it shouldn't be surprising that it's taken so long, because when you look at the total expansion that has happened in the growth of the economy, it's maybe no different than a regular cycle, but because it took so long and growth was so low for such an extended period of time coming out of it, that it makes complete sense that it's taking longer.
This is very important. The best environment for stocks is an environment of low interest rates and low inflation. They call it Goldilocks. We're in Goldilocks. The Fed isn't going to do anything this year. Bonds aren't really competitive right now with them. I mean, we're at 2.5% on the 10-year. That's not really, competitive with stocks when you get a dividend of 2%, right?
Yeah.
And some growth. So I think we're in a good spot. It'd be interesting. It may be shaky the next few weeks or months with the China trade deal. It could go back and forth depending on tweets and what China does. But the bottom line is they don't want to lose 1 to 3% of their growth every year. They need us to buy their stuff.
Yeah, true. Thank you so much for watching. If you have questions, concerns, you can, there's a link below this video where you can schedule a free strategy call. If you're a client of True North, we're calling you on a regular basis to discuss these things anyway. But if you are not a client of True North and you have questions and want to know how this environment is likely to impact your particular investment portfolio, click on the link below and schedule your free strategy call today. Thank you again so much for watching. Please like, comment, and subscribe on YouTube. We put out several videos a month, and we hope you find this valuable. Thank you so much, and have a wonderful day. we have.
How do you like my hair?
Okay, that
No,
joke
that's
is
old.
getting
That's
so
getting old. I know.